This is the Southside School of Financial Freedom Watch List and Market Report for the week ending September 10th, 2022. Our question this week is, what is systematic risk? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average increased 1.19% on Friday and was up 2.66% for the week. The S&P 500 increased 0.61% on Friday and was up 3.65% for the week. The Nasdaq increased 2.11% on Friday and was up 4.14% for the week. Looking at the week, we can see that there were 3 down finishes versus 9 up finishes for the major indexes. On Monday, the market was closed. On Tuesday, all the major indexes finished down. On Wednesday, Thursday, and Friday, they all finished up. The new unemployment claims were 222,000 versus 237,500 expected. Mortgage rates approached 6% on Thursday, but mortgage demand dropped as interest rates shot up. Bitcoin traded below $19,000 on Wednesday, but rebounded to close above 21,000 by Friday. The dollar soared to a 24-year high versus the Japanese yen and a 37-year high against the pound sterling. And Fed Chairman Jerome Powell vowed to raise interest rates to fight inflation until the job is done, he was quoted as saying. New unemployment claims, mortgage rates approaching 6%, mortgage demand dropping, Bitcoin trading below 19,000 and then rebounding above 21,000, the dollar soaring against the Japanese yen and the pound sterling, and Fed Chairman Jerome Powell vowing to keep raising interest rates are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up for as long as the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is systematic risk? Systematic risk is the inherent risk of the entire market. It is also called undiversifiable risk. It is the risk that every segment of the financial market can fail. Stocks, bonds, commodities, metals, and even real estate can all fail. In a pan sell-off, that is when everything is being sold and prices drop, is an example of undiversifiable risk coming to fruition. Systematic risk is uncontrollable. Systemic risk is often associated and confused with systematic risk. Systemic risk is limited to a specific company or market segment like Tesla in the case of a company, or the entire segment of the stock market like, say, the financials or banks. When systemic risk is too high in one company or segment, investors and traders can and do invest in other segments. However, systemic risk in one sector, like the banking sector, can spread to other segments of the stock market. For example, when one bank gets in trouble or fail, another bank may also get in trouble. A general panic can occur, and eventually the whole economy can be affected. There may be bankruptcies, unemployment rises, house sales plunge, poverty increases, etc. So the systemic risk can quickly turn into systematic risk. What do you think are the risks today? Are the risks systematic and or systemic? Are they too high for you to invest in the stock market? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you absolutely nothing about the U.S. financial system. You can, however, learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside trading watch list from the week ending September 10th, 2022. The strongest performer on the list this week is Riot Blockchain Incorporated, ticker symbol RIOT. It's in the second column. It increased 10.72% on Friday and was up 24.59% for the week. Riot Blockchain is a U.S. cryptocurrency mining company. It primarily focuses on Bitcoin mining. It has at least 7,043 miners. The company has several subsidiaries, and through its subsidiaries, Riot Blockchain also seeks to develop a blockchain-based escrow service for wholesale telecom carriers. Riot Blockchain holds a 13% share of a digital exchange company in Canada, and it holds investments in a company that provides cryptocurrency accounting and audit technology services. Looking at a summary of results, you can see that Riot has decreased slightly more than 63% year to date. I did not trade or generate cash flow from Riot Blockchain this week, but I have traded it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 index ETF SPY. The Southside portfolio is down minus 2.26% versus minus 14.39% down for SPY, a difference of 12.13%. The Southside is beating SPY by just over 12%. The cash flow generated by the Southside cash flow system for this week was 3.83% of the portfolio account value. The account value changed by 0.99%. Meanwhile, the S&P 500 ETF SPY changed by 3.66%. Bitcoin Watch. Bitcoin gained 3.63% this past week, and it continues to be in a bear market. It is down just over 69% from its all-time high, which was achieved in November 2021. I sold option contracts on one position this week. It was a call position that ranged from $0.00 to $115.01. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists. Levels 1, 2, and 3. Level 1 being for beginners, level 2 is intermediate, and level 3 is for more advanced investors and traders. The videos are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.